Tuesday. I hope you're having a super Tuesday. And that it is 5x5. They're all happy, healthy, prosperous, and enjoying life and liberty to the fullest. And that more importantly, you are doing good things as much as you can. Yeah. You're not, well, I hope you get there at some point. The sooner the better. So, Bitcoin, Litecoin, Solana, XRP, so many other coins, ADA, BNB, DOT. What's the deal, yo? Is there an alt season or not? Well, if you look at a lot of the coins, you can certainly see, like many coins have had some seriously nice moves up and down, right? Solana gave some very nice moves to the upside a couple weeks back, and has since last week or so given some very nice moves back down, right? Dropping from like whatever that high was, 265 or something like that, to I saw that yesterday at 220, 225 in that area. It's was quite a nice drop, right? So if you took your profit at or near that high and then shorted that, again, very nice moves, very, very nice moves. Talking, almost 18, 20 points, right? In like a matter of a week. Very, very nice. And same thing on like Litecoin, right? It went up from like $60 or something thereabout in early November. Was over $123 yesterday. It's had many nice moves up and down along the way. Definitely appears to be in some kind of an alt season, right? Well, we'll see. I've been telling you all about Litecoin for ages, right? That thing is, in my opinion, still extremely undervalued. XRP, right? XRP has been making sick moves, right? The thing is now, the people who were holding that thing from when it was above $2 back in January 2018, right, you're back above water now. What are you going to do? You're going to sell? You're in profit? Or are you going to keep holding? Remember, this thing went up to like $3.31 in January 2018. Since then, it never revisited that high. Right? And it never closed the month there. That was just the all-time high on whatever day it happened to be at. So are you going to be one of the XRP holders? It's like, finally, I'm out from under this yoke, and it's time to just take some profits and, or at least close even and not lose any money on the deal. Or are you one of the hands that sold and never bought back in, right? Or are you what? If you're one of the hands you sold and never bought back in, well, what are you going to buy now? That's at the all-time high or near it? Probably not, right? What is it at? Like I saw this morning, I saw it was like a 273. 273 is like more than 5 times the price it was like 2 weeks ago. I mean, hello. Hey, what's up? I see hello. I see your messages here in the chat. Thank you for being here. Who you? I am Yasha, and I talk about crypto trading and marketing and sometimes current affairs, current events, things like that. But right now I'm talking about the Bitcoin and crypto markets. Right? XRP is currently on a tear. I mean, honestly, 273. Listen, if you're low time frame trading on the VEPs, right, you will see it is way above the power mean ribbons. It is absolutely an outlier right now in many respects. Does that mean it can't be more of an outlier? No, look, it went up more than 200 points last month, like 283 points or something %. And this month it already went up, more than 30-40%. As a low time frame trader, I would not be swing trading this thing, right? There's just no way. Like, it could come down. Remember, it can come down as quickly as it went up, even faster, right? People can just dump it and take their profits, and it's gone. And remember, there are literally countless people, so many people who bought at or near the very top, above $3, between $3 and $3.31. Many of them are already close enough to a zero, not having a loss, that they're probably thinking about, maybe I'll just dump it down, take the L, and lose 5%, 10%. Who cares? Hey, buddy. Hello. And some of them are already in profit, obviously, and they're thinking, hey, how much can I get more out of this before it dumps? And they don't know, because they're not looking at leading information. They're looking at lagging information, if they're lucky. And it's not if they're lucky, of course, but that's if they're doing what most everybody does. It says here, yo, cool, I am subbed for the future because I could use your advice. Well, I'm not going to give you advice, quote unquote, when it comes to trading, but if you want to know about probabilities and statistics of the volatility and the entropy, stick around, because that's what I talk about. I talk about the actually highly relevant maths that are used by the HFT firms, right? Like if you look at the VRE charts, you look at the volatility, you look at the entropy today on these alts, look, it doesn't, yes, there are some probabilities that are to the upside, but you can bet there's huge probabilities looking at the downside. Huge ones, in fact, right? Like XRP could easily dump back down to the 70-cent zone very quickly, right? And it wouldn't even be a bearish divergence on the returns. In fact, it would be setting up possibly hidden bull. Or it could be setting up bull, it depends. But again, when you look at the returns oscillator and you look at the data set, you see the real divergence, right? We don't use RSI to look at divergence or whatever else you might use, because that's lagging information that's built on price. We don't use things that are built on price for the most part. We pretty much just look at the returns, right? And things that are built on the returns, and the entropy, and things that are built on the entropy. Why? Well, because that is the relevant set of maths that is used by the high frequency trading algorithms, right? That's how they calculate volatility. That's how they calculate random walks and trending moves. That's how they calculate the entropy is, increasing or decreasing, gaining, relevance or decreasing in relevance. Whether the volatility is showing that directionally it's going to go to the upside or the downside, with the correlation of the data set. So whether the returns are showing that they're positive or negative, and whether the correlation is positive or negative, and so on and so forth. All of our key indicators are all either built on the returns for the most part, and also on entropy. But also we have, right, the normal distribution ones, which are, again, tied to the standard deviation of returns. And we have the Laplace distribution models, right, which are also based on distributions, right? And based on the Laplace distribution of returns, the Laplace deviation, if you will, of returns. So yeah, it's all about the returns, man. Like that's what investors look at when they calculate their profits or their losses, right? Well, that's what traders should look at too. Unfortunately, most traders don't know that. And they might hear it, but they don't really know what it means, right? The returns are the returns on investment, right? So if you put $1,000 into something, and then you get $100 profit at the end of a specific period of time, it could be a day, a week, a month, a year, whatever, a second, and you made 10% return on investment, right? It's a profit, a gain. It's your return. If you lost $100 of that $1,000 in value, then you'd have lost 10% of your return on investments, right? That's how you calculate your profits and losses. Very basic. Unfortunately, too many people in the trading world don't understand this. All they see is number go up, me make money on long. Okay. If you actually realize your profit, if you hit the close trade button and take your profit, then sure. If you don't, It's a lot harder to be profitable when you're not taking profits. Like a lot harder, right? If you are taking profits, then do that consistently. If you're limiting your losses, do that consistently. Right? In other words, don't sit in a trade where you are in a losing position. Right? Just get out as quickly as possible. And of course, don't be emotionally attached to your trades, because that is the worst thing you can do. Right? That's why you have all these crazy people losing tons of money. And they're not crazy as people. I'm just saying, people, when they're trading, they're behaving crazy because they're emotionally attached to their trades. They're doing things that normally they wouldn't do. They would see somebody else from the side doing the same thing. They'd be like, wow, that's crazy. Yeah. And then that's what they end up doing because they're emotionally attached, right? Which is the biggest mistake you can make. When you're emotionally attached to a trade, you really should just get out of it. Doesn't matter if you're in the profit or not. Just get out, my opinion. Why? Because statistically, if you're emotionally attached to your trade, you're more likely to lose money because you care about which way the trade goes. That means you're not likely to make the best possible decision based on the information you have. Right? You're going to make the decision you want based on the outcome you want. That's not how we do science here, right? If you have a hypothesis, we test it. The purpose of testing it is to prove that it cannot be correct. It's to make it fail. You want your hypothesis to be tested as often as reasonably needs to be to demonstrate it can't work, right? And if you can show even one time it doesn't work, it doesn't work. And if you can't prove that it doesn't work, then you have something here. Then you can move forward, right? If you can't make your hypothesis fail, if you're unable to make your idea fail, then you might have something here. Then you need further testing, right? To confirm that it wasn't just an accident, that it happened, right? That is the entire modus operandi, if you will, of the scientific method. We test things to failure. Every idea. We test all the ideas. The point is to make them fail. If they do not fail, and if we can't make them fail over and over again, and we, run through multiple separate experiments to see if it can fail. If you can never make it fail, then you have something, right? Then you have a theory, right? Which is as close to a fact as you can have in science. Right? We don't call things absolute facts because working in absolutes is always ridiculous. Because what if something works for 10,000 years, but then someone discovers something 10,001 years from now, and actually there's this one way you can make it fail, just nobody ever did it before, and it wasn't relevant for 10,000 years, but now suddenly everyone knows, and it's relevant. Right? That kind of stuff happens. That's why scientists don't use the word fact when they're talking about things they discover. Right? They use theory. Theories are extremely well tested. It's not like a theory like, I have a theory that if I go to the store at 2:48 in the afternoon, they won't have the certain toilet paper that I like or whatever. That's not a thing. The word, it's quite different having a real scientific theory versus just casually using the word in conversation. Anyway, that's why it's the same thing with trading. You need to see for yourself that the VEPS works really well. You got to go. Thank you for telling me about crypto. Okay, sure, man. If you want to talk about any of you have any other questions, just feel free to ask. I'll be happy to answer whatever I can. So that's it for now, folks. And so you guys feel free to join the live stream at Alpha Trading. Just go to alphatradinghq.com/Discord. It's free to join. Free to request the free Volatility Starter Pack. And you can join the live streams. They are Monday through Friday. They start at 9 a.m. Eastern Time in the U.S. Okay. That's it, folks. Happy Tuesday. Happy trading. Cheers.